Hey, thank you for tuning in. Today is Tuesday, the 25th of November, and in this video I'm going to cover a sequence of trades from earlier this morning. Okay, so let's go to the trade tab here in the activity module, and the first thing I did was I sold a call vertical in the 67 handle. I sold a 50 double, and I believe I got that for around 70, okay, it was 75 cents. Subsequent to that, so we can see this was basically 35 seconds later, hovering down here, I bought a put vertical down in the 66 handle, the 70.65. So roughly 80 handles away, and this setup was done for zero. So it didn't cost me anything other than commissions. I did not receive a credit. All right, so at that point in time, it was 8 minutes after the market opened. This is 6:38 Pacific time. And let me go back to, let me set 30-minute candles here. All right, so it was in this handle that I'm hovering over. It's a half-hour candle. And we can see that the high was 67.14 in the SPOOs, and the low was 66.59. All right, so we have that set up, and looks like 4 minutes later, it didn't take very long, the market started to go down. So let me actually switch to 5-minute candles. Let me go out to 6:30. Okay, so between 6:35 and 6:40, we see that there was a drop of from high to low 23 handles. So the market, as I initiated the trade, was near the high, and I did want to have some sort of short structure from this general area. And once you have an idea what you're going to do or what you want to do, then the trade structure itself is basically very trivial. So as the market was dropping, I decided to convert the positions into a butterfly. Note that at 6:42, I bought the 45.50. And remember, prior to that, 4 minutes before that, 4.5 minutes-ish, I sold the 50.55 call spread, and then I bought the 45.50, which is here, converted that to a butterfly, and down below, I gave myself a little extra room. I sold the put spread. I sold the 55.50. This is in the 66 handle. I sold that for 80 cents, and the butterfly cost me 60 cents. So now I have a combined position of two things. I have a butterfly up top with the center strike being at 50. This is 5 wide. And down below, I have a condor between the 70 strike and the 50 strike. And I'm not saying that prices are going to expire. These are 0DTs, by the way. I'm not saying the prices are going to expire in this range, or I get to pin the tail on the donkey, on the butterfly. However, the market did recover or rally after it hit the lows. Let me go over the next 1, 2, 3. I got 15 minutes with a range of basically, what's the high print here? 04 to 74. So there's roughly a 30 handle range in this 15-minute time period. And then the range contracted a bit. We had more of a condensed range over the next 15, 20 minutes. And from that point on, we started to rally. I'm actually a little bit surprised by this. I thought we might have a little bit more. I thought we might have more weakness, and the market might test levels down below, maybe somewhere around here. But that's not the case at all. It's actually, you can consider this pretty strong. So So another illustration of the position is basically this. I entered in the prices so we can see that the first call that I sold, the 50.55, was done for roughly 75 cents, and the put spread I bought down below was done at the same price. So this initial setup is on for 0. And then when the market started to drop, I was able to butterfly off the call vertical and Condor off the put vertical for a small credit. The ensuing position graphically looks like this. So I have the Condor down below and I have the butterfly up above. I'm currently working orders to sell both. Given the current levels of volatility, I'm probably not going to be able to get much at this point for the vertical, which is more in play. It has a higher probability of generating a bit more profit than the Condor does. However, the market has been volatile, and who knows, maybe this will come back into play. But establishing the current structure for this position for credit is definitely helpful. There's nothing for me to do with the rest of this other than let time expire and let the clock run out and see where prices are later on in the day. And again, if I can peel this off, this butterfly, for anywhere between, let's say, 70 cents and $1, the multiplier of 100, that would be $70, or $100. So the vertical spread is the multiplicand, and the multiplier is 100 on SPOOs. I'd be okay with that. I don't know if I'm going to if I'm going to carry this to expiration. It really depends on what the market's doing. So it's going to be a function of where the price looks like the terminal price is going to appear to be. But that's a few hours away. I don't have to. It's only 9 a.m. right now, so I have 4 hours to go to see what happens. But in the meantime, this is the current structure, and all this was done within basically 5 minutes. So I was fortunate enough to get the trade off as I wanted to. I was really worried I was going to miss it, but I didn't. I could have been a bit more patient, and I could have sold I could have turned this into a Condor for a bit better of a price. Remember, I sold part of this for 80 cents. I sold the double 50 for 80 cents, and as the market hit the low, which happened fairly quickly, I could have sold this for at least $1.30, I believe, possibly $1.50. So there's some profit that I missed out on, but that's going to happen all the time. Anyway, we have roughly 4 hours to go to see how this plays out. All right, that's it for now. Catch you guys next time. Thanks for tuning in.